It's interesting. I'm actually looking at potentially trimming off some of my silver position as we get up to this 106 level. I think there's a couple. I'd like to see how silver performs when it gets to these levels. I like to trim off profits. So a lot of people's portfolios who are heavy weighted in precious metals obviously now has a very heavy weighting because of the increase in value. So there's going to be some rebalancing, which is probably a big portion of what you're seeing is people are like, wow, I got huge profits. And there's no doubt, when money comes this quick and this easy, although many people have been waiting in the silver space for a very long time, it has definitely exploded and we've got big returns very quickly. And so people are naturally going to be locking in profits along the way. It's not a bad thing. I think it's very smart and savvy, and that's what I'm starting to look at doing as well. But again, there's been so much growth that portfolios are way out of whack in terms of they're heavy weighted. They got too much in one basket, the precious metals basket. And if it was to have a correction, they don't really want to give too much of it back. There's no doubt it is exciting. I mean, we've been waiting for silver to have this type of move for decades. It feels like it has been decades, and now we're starting to get it. I mean, when we look at the charts, I'll share my charts and give you kind of a projection of what the charts are pointing to. When we look at the daily chart of silver, obviously we've seen it just really explode in 2025 and so far in 2026. But there's a lot of high momentum here in silver. Just if we look at the amount of the volume has continued to pick up. We're seeing people around the world of all stature, all classes, like starting to buy silver, right? People are buying it at the post office, they're buying it at Costco. I mean, record amounts of silver is being picked up. So it is a hot commodity. It's becoming mainstream, the play to be in. And just looking at this chart, just using technical analysis, which you and I, Elijah, have shared quite often, is the Fibonacci extensions, which are one of my favorite tools. I find it is the most powerful and the most accurate tool to identify where the next level for price action is to move for any given asset class. So based on this run up that we saw coming out of October to this high capitulation peak that we saw back in December, and then we come back down to this low, this gives us an idea of two levels where silver should run into some resistance. The first one is this 618 extension. This is called the 61% move. This is called the golden ratio. This is typically where if the golden ratio level is reached and we see some volatility, which we have seen, we had a very sharp pop into this level. And then as you and I are speaking on this particular day, which is January the 15th, a Thursday.
One of the clearest signals behind silver's rise is volume. Trading activity has expanded dramatically, reflecting strong conviction from buyers across income levels and regions. Physical silver demand has reportedly surged through retailers and bullion distributors, while financial exposure via ETFs and futures has also climbed. Industrial demand adds another layer, with silver playing a critical role in solar panels, electric vehicles, and electronics sectors still growing despite economic uncertainty. When rising volume meets strong price action, it often confirms a genuine trend. This combination suggests silver's rally is being fueled by both speculation and real-world demand.
We saw a very sharp pullback, gap down, and then it's rallied back up. So this is a very good sign for silver. If we have a hiccup, a pause or pullback at the 618, we usually almost always go up and hit that 100% measured move, which is 106.25. So there's a pretty nice potential move here for silver based on the current price. That's about a 16% gain. And that could actually happen with only a couple trading sessions, the way silver is moving. So very bullish short term for silver. The longer term picture of silver, it definitely has some signs of warning when we zoom out on the charts. And I'll just kind of clear some of the drawings. We have this big capitulation, this big peak. I'm always afraid of things that go straight up because it usually means it's a crowded play. Everyone's buying at the same time. Nobody wants to sell because they like it. So it just means you got to pay a higher price in order to get some. And so we get these giant parabolic moves. That being said, I do feel like we finally have cleared that $50 mark. When we go back, we look at silver back in the 80s and the peak that we saw back in 2011, and we kind of just carry kind of that price action through here. I feel like, we've broken through that $45, $50 per ounce level. And I think we're going to probably see silver stay above this and dramatically above this as it keeps working its way through. So silver's on its way to continue to move higher. The big question is, when do we start to see a bit of a pullback or pause in this space? And at this point, we're not seeing a lot of signs of it just yet. We are seeing increased volatility. If we look at silver on the daily chart, it had from the high of one day to the low of the same day, it was a 15% move.
Technical analysis provides a framework for understanding where silver may head next. Using Fibonacci extensions, analysts often identify potential resistance zones where prices pause or reverse. After a powerful run and a brief pullback, silver appears to be stabilizing near a key golden ratio level. Historically, when this level holds, markets often push toward a full measured move higher. In silver's case, that implies further upside in the near term, possibly achieved quickly given recent volatility. Short-term signals remain bullish, but they also hint that the pace of gains may be testing market limits.
And a lot of that actually has to do with the margin calls, the margin requirements that have been changed on silver. As it goes up, the exchanges start to put on margin requirements to protect themselves, to protect investors. And so that's created some of these big volatility sessions. But when we get big volume and we get an increase in daily price swings, it's also a sign that price might be getting a little bit overextended and might need a bit of a breather here soon. But at this point, we're still looking for 106 on silver as the next target. And then after that, it's probably going to do what we have seen many times before, which if we zoom out on the silver chart, it tends to rally and then take a breather, right? It'll move up and then it'll take a breather for a long time. Then it'll have a move up, pause, move up, pause. So I believe when we get up to 106, it'll have another big pause. And the big question is how does the price action move? Is it a pause before it goes a whole lot higher up to like 120, 125? Or is it a potential topping sign? We don't know. The nice thing about charts and using Fibonacci extension is it just shows us where the next target is, and we just have to manage our expectations and our positions based around that. So I'm very bullish on silver. It's exciting to see where it is, but got to be aware. I think, we got about 15% more upside, and then I think we could go into a multi-month pause, and then we just need to see if it's going to have a bigger correction from that point or if it is just a pause.
Zooming out reveals a more complex picture. Sharp, nearly vertical price increases often indicate crowded trades, where enthusiasm runs high and risk quietly builds. Silver has recently experienced extreme daily swings, partly driven by changes in margin requirements designed to cool speculation. These rapid moves can shake out weaker hands while warning disciplined investors to stay alert. High volatility doesn't mean a trend is over, but it does suggest prices may need time to consolidate. Historically, silver tends to advance in bursts followed by extended pauses. Recognizing that rhythm is essential for managing both risk and expectations.
It's interesting. I'm actually looking at potentially trimming off some of my silver position as we get up to this 106 level. I think there's a couple. I'd like to see how silver performs when it gets to these levels. I like to trim off profits. A lot of people's portfolios who are heavy weighted in precious metals obviously now has a very heavy weighting because of the increase in value. So there's going to be some rebalancing, which is probably a big portion of what you're seeing is people are like, wow, I got huge profits. And there's no doubt, when money comes this quick and this easy, although many people have been waiting in the silver space for a very long time, it has definitely exploded and we've got big returns very quickly. And so people are naturally going to be locking in profits along the way. It's not a bad thing. I think it's very smart and savvy, and that's what I'm starting to look at doing as well. But again, there's been so much growth that portfolios are way out of whack in terms of they're heavy weighted. They got too much in one basket, the precious metals basket. And if it was to have a correction, they don't really want to give too much of it back. So this is definitely a sign. I think people selling it is a sign that it's probably still going to go a little bit higher. Simply, I think we're going to have one more big pop. This move to 106, I think, is going to be a FOMO type of move. It's going to trigger people who have sold it to maybe want to get back in because they feel like they have missed out. It's going to suck in the last of the people who didn't get into silver yet. It's going to get them in. And these Fibonacci 100% targets usually become very emotional turning points where people feel like they have to get in and And it usually ends up being a major turning point in price action where it'll pull back or pause for a long time before it decides the next move. So I like silver. I'm going to be looking to potentially start trimming it once we get, to that $100 or above mark, just to recalibrate, lock in some gains. That's a healthy thing to do. So that's kind of my take.
As prices climb, profit-taking becomes inevitable. Portfolios heavily weighted toward precious metals often require rebalancing after sharp gains. History shows that silver corrections can be severe, sometimes retracing 50% or more of prior advances. Such pullbacks don't invalidate the long-term story, but they can consume years of recovery time. The true cost isn't just lost value, it's lost opportunity. Active investors often trim positions into strength, preserving gains while remaining flexible. The goal isn't to predict tops perfectly, but to avoid being trapped in prolonged drawdowns that stall capital and momentum.
The last time we had a big sharp pullback after these parabolic spikes, we saw silver fall 50, 60, 70%. And believe it or not, I'll share my chart here real quick so you can get a visual. So if silver was to rally up to 106, right up to this level, 106 up here, a pullback, which is what happened in 2008 and those previous spikes that you said, they were big. They were 50, 60, 70% pullbacks. And believe it or not, you get that 50, 60% pullback, it brings us down to this $45 per ounce silver, which is a very big breakout point where price just exploded after. And I believe, that's potential downside in silver. I think gold could pull back 25 to 35% if we do have a big correction. Now, the big thing is you don't want to bet on what you think is going to happen, right? And that's what gets people offside. It gets them in the wrong positions or holding on to positions that are going against them. The key is you got to stay invested with the trend. You can slowly sell and lock in profits, trim off some of your positions, and that's what a lot of people are doing. And then the big question comes, Elijah, is like when we start to see the price pull back and chop around on the chart, say it gets up to 106, it's going to form some type of pattern, something. And the big question is it going to resolve and break to the upside and have a huge move and explode even higher? Or does it actually create a topping pattern and then start to break down? And if it starts to break down, that's where I step in and be like, okay, this move is over. I want out, and I will let it recalibrate, figure out how far it's going to pull back. And then when it turns around and builds a new base and starts to move higher, then I would get back in, just because I'm more of an active investor in terms of I only want to hold an asset going up. If it shows signs that it's going down, get me out. I'll just buy it back later when it's proven itself. So nobody knows where it's going to go. And so we just have to follow these trends, let the targets get hit, let the price chop around and build a formation. And if it's a bullish formation, we hold tight. If it breaks down, it's a bearish pattern, I like to move aside because I expect I can buy it back at the same price or lower later when it's actually going to just, move in my favor right away, because that's the biggest thing. We can all make money back. If we lose 60%, we can always make it back over time. The catch is, and the real cost is the time. Nobody wants to wait 5-10 years to make back money. That not only that, but we can make a lot of money in 5 or 10 years if we just put it in assets that are moving. So I like the precious metal space. I think everybody needs to be long, but you do need an exit plan, and you need to know how to identify when gold is topped, when platinum, palladium, and silver has topped, because they can wipe out and give back a ton of your profits, and you could go dormant. You might waste a lot of time, and time is money.
Silver doesn't move alone. Gold, platinum, and palladium often rise together during commodity cycles, though each has a distinct personality. Gold remains the steady anchor, slower, less volatile, and widely viewed as a global barometer of risk. Platinum has shown renewed technical strength tied to industrial use and constrained supply, while palladium remains more uncertain after past volatility. Silver sits between these worlds, part industrial metal, part monetary asset, and uniquely emotional. The lesson across all metals is clear. Stay aligned with the trend, define exit strategies, and remember that protecting time is just as important as protecting capital.
I still like gold. Gold's always my favorite, just because to me it's the most accurate the more I win more trades with gold than anything else, and I could put more money into a gold trade because it doesn't move 15% in a day. So I feel more secure with gold. It's slower moving. It is more of a global barometer of fear, so it naturally wants to keep moving up with less volatility, where silver gets a little more frothy. If we take a look at the gold chart, based on this chart pattern, we are looking for about $5,170, $5,200 for gold, which percentage-wise from where we are right now is roughly about 12%. So I really like gold. It's the boring play, but here's the thing. Boring things generally make money because, first, they're more consistent and you can rely on it. Second of all, if it's boring, you probably have a system or strategy so that it's not random. It doesn't feel like a roller coaster ride. So I like gold a lot. We're positioned in gold with an extra ETF play to take advantage of this run that it's in now. But as you mentioned, there's a few other, platinum has got a very strong chart pattern here that is pointing to another significant move. We could look at this recent run up in the peak and the pullback. It's telling us that we could see platinum run all the way to 3,060. And percentage wise from where that is right now, it's got 20, 26, 27% upside. So platinum could have a very big pop and run. And this is very similar to the 2007, 2008 move, where we saw all of these metals move together, and silver, platinum, and palladium all moved about 60% to the upside. And we've already seen the first half of this move to where we are now. So, we're looking at a very big potential move in platinum, palladium, silver, and all of those right now. I'm not as excited about palladium. The chart doesn't look quite as. It's a little more choppy. A lot of damage was done with this big sell-off. So I do like gold number 1, silver number 2, platinum number 3 as my plays. But I mean, in full transparency, I mostly own silver. When it comes to physical metals, I have about 65% silver. The rest is in gold. I don't have any platinum or anything like that. So I'm definitely loving the huge percentage move in silver. But I also know it's a wild stallion. It is fast moving, and you do have to be able to pull the trigger and be happy with gains at some point and be ready to step aside by trimming profits and exiting if it shows signs that it's topping. You can always buy a commodity or a stock back. I don't care if I buy it back at a higher price later, but I want to buy it back when I know it is starting a new fresh run and it has lots of upside. I have no problems paying a bit of a premium when it's just starting another move versus holding on to it and wasting time. And that's the biggest thing that a lot of people don't realize is how much time a lot of people waste in the precious metals space and mining stocks, waiting for these rallies that take sometimes 5, 10, 15 years to come to fruition. And so, yeah, that's how I kind of navigate the markets, how I see these various metals.